Hello, everybody. We're getting ready to do Module 2. I hope, Module 1 was really helpful and everybody's organized and you took the time to do the action steps. We're going to dive right in here to Module 2. Module 2, I like to call Pinpoint. It's basically identifying your expenses, your goals, and calculating your B number. Basically, what we're going to do is we're going to get everything figured out that we need to plan for, that we need to use throughout the month. Doesn't really help to have to keep going back over and over and over and redoing things because, oh, I forgot this, oh, I forgot that. So we're actually going to take some time very intentionally now to sit down and identify all the things that we're going to need to use in the future. So again, let's start with a great quote. The speed of your success is limited only by your dedication and what you're willing to sacrifice. So you have to decide what that is. So we are in Module 2. In this module, we're going to calculate the B number. We're going to find all of our expenses so we don't forget any. And we're going to identify all of our financial goals. And also, we're going to look at some categories of things that maybe you've wrapped up into other expenses in the past that it might be better for you to categorize differently this time. All right, so I wanted to start by telling you that money management itself doesn't need to be complicated because we're getting into the mechanics of managing money this module. So here are some of the top things I expect or request, I suppose, people to do. Number one is take all the bills off of auto pay, and I want you to be intentional. Now, I know this can be hard for certain types of subscriptions. I know my scheduling subscription is, $16.07 a month, and it comes out automatically. You have to give them a card for that. But I'm talking about the bills like your internet or your rent, your utilities, maybe some debts. Anything that people can actually go into your account and pull money from that is not something like a small subscription. I want you to be in control of that money 100% of the time. So I want you to take it off auto pay and make sure that you are physically taking the time to sit down and pay your bills. All right, so this goes back to the control of you decide who gets paid how much and when. This is very important when we get into managing our cash flow, because if we give people the opportunity to go in and just grab money from our account on a given day, let's say somebody pays us late or we've had slower sales in the beginning of the month or something, you could actually end up in big trouble. You could even bounce checks if somebody goes in there and does that and then something else comes out. So I want you to decide who gets paid, how much, and when. We'll get into that in a little more detail. Again, having that single organized place, whether it's a notebook or a spreadsheet or even, the templates that I gave you. I hope that was already completed last time. And again, we talked about turning over bookkeeping if it's not in our zone of genius. And the last thing was to have that easy system to make your tax deposits. If you do these things, then your money management is going to be very streamlined and straightforward, and it's going to make it so you're constantly in control, and yet you're being compliant with all the things you need to do. All right, so we are getting into the mechanics of money management with this module. And this one is, number one is P for Pinpoint, right? It's the first one. I'll give you an overview here. The way you manage your money using the mechanics of management would be pinpointing what we're doing this time. Then we're going to plan, we're going to protect, we're going to manage, which has two parts, which is track and adjust. And then finally, producing more income. I believe that producing income is a mechanic or a piece of the mechanics of managing money, that you have to turn that engine to make more. All right, so this is it. Step one, pinpoint your expenses goals, calculate your B number. So what is a B number? Well, the B number is the minimum amount you need to make every month in order to cover all of your expenses that you need to stay in business, including your own paycheck. So I treat the B number as the number of your four walls. And I explained a little bit last time about being a Ramsey coach and protecting what's on the inside of your home. Your business also has four walls. The first one is access to your buyers. If you're an internet-based company and you don't prioritize your internet bill and your internet gets cut off, you can no longer reach your buyers. Then we're going to talk about your critical operating expenses, the things that you have to absolutely pay for to stay in business each month. Then we want to look at a right spend of inventory and products. I have found very early on that people overestimate the amount of sales of certain products sometimes. And when that happens, they end up tying up money and it stays on the shelves rather than being fluid and liquid and used for other things. So we want to talk about how to find that right spend. And then finally, payroll and payroll expenses. That's your fourth wall. Now, if you're an employer, you'll have payroll and payroll expenses. And if you are a solopreneur, you will still have payroll and payroll expenses. Even if you just started yesterday and you're not yet turning enough money to give yourself a full paycheck, you are going to use this to estimate what it is that you need to bring in. What the B number does, it takes away a little bit of the stress of, oh my gosh, did I make enough this month? Right? We don't ever want to live like that anymore. We always want to be in control. We always want to know what we need to make and when we need to make it. And we'll go over all that throughout this course. But for now, and just know that the B number is going to give you all of that information. And then guess what? We have other categories that we need to talk about that are not our 4 walls. And I don't talk about the 4 walls as your quote unquote overhead. And the reason is because overhead most of the time does not protect the entrepreneur personally. And I believe that the entrepreneur should be equally as valued as everything else in the business, because without that entrepreneur being able to show up every day, the business just can't function. So what are our other categories? Well, people have debt. We have other business spend, things like marketing or projects or future goals. We have profit goals. We need to make money. That's why we're in business. And then what I call your parking lot categories, that's where I'm parking my profit until I have a certain use for it, or I'm feeding different parking lots to meet different goals at the same time, and I'll happily explain all that. So your B number, again, this minimum amount that you need each month, and this keeps the doors open and keeps you fighting in fighting shape. So again, I'll just review: rent, utilities, or internet is your access to buyers, your critical operating expenses, your bare minimum spend or your minimum spend of inventory and products, and then your payroll and expenses. Now, when you're consistently hitting this number every single month, you are now into a breakthrough to profit. That's where the number or the letter B for B number came from. That's your breakthrough number. Everything that's above this magic number that you're going to find for your business is profit. It's money that you don't need to run the engine every single month, including your own paycheck. So literally that becomes the fun conversation. That's when you're going to start being able to put money you know, just in different places for different purposes. All right, so wall 1, we're going to dive right in, and you're going to figure out your B number if you don't already have it. If you have figured it out in the past, this is a great review. Maybe some things have changed recently, and you're going to want to take a look at it. So the number 1 thing, again, is that internet and utilities and rent and cell phone, the ways that you access your buyers. These expenses are always paid first, again, because you want to keep that door open. So go ahead to your workbook there, and you can write down the things that apply to you, whether it's internet and phone, because you're all e-commerce, or if it's rent and utilities, because maybe you have a brick and mortar, maybe it's a hybrid and you have both. If you have a home office, I want to challenge you to come up with numbers for that rent and utilities also, and here's why. You're actually using family resources for business purposes, and you're turning a profit. Particularly when you're turning a profit, you should probably reimburse your family for that. You can put money back into the family income. So, you know, depending on how you decide to write off your house or not, whether or not you use a square footage number or whatever, I want you, though, to think about a number, a rent that you would pay to yourself that is dedicated for home office space. And then utilities also in proportion to the square footage of your home that's dedicated to home office space. Now, you can contact your tax professional and figure out your square footage and percentages and what you need to do. But what I want you to do, though, is know that I hear more often than not, oh, I don't have any of those expenses. I just use my phone and the internet my family pays for. Well, where do you store stuff? Well, it's in that bedroom. You're using family resources for commercial purposes. And so I just really, you know, think that you need to start kind of considering what you should be giving back to your family. All right, number 2, wall 2, critical operating expenses. These are critical expenses, meaning you can't operate without them. If you have something like Talic, which is a payment platform processing thing, and every month you pay an access fee of, I think it's $15 or $20 just to have the terminals, that would be a critical operating expense, because without those terminals, you can't get paid. I am not talking about the interchange fees that you pay when you accept a card, because those interchange fees are actually taken out of the money you receive. I am talking about anything that you have to put out before you get paid. For me, I pay for scheduling software. I would say that in the past, it wouldn't have been critical because I could still manually take care of all my appointments. Nowadays, I would say it is somewhat more critical because it does free up a lot of time on my calendar that I can use. You know, some people have critical operating expenses like Adobe Suite. I have worked with designers who have certain software products that they have to pay for, a subscription for every month in order to use the product and do their business. I also worked with a private investigator at one point, and she needed something called LexisNexis. She had to have a particular database in order to legally do her business. Obviously, that would be a critical operating expense. Now, if you can live without one of these products or services, I want you to decide whether or not you could be paying for it or if you need to pay for it. Now, the beautiful thing is critical operating expenses are completely and utterly up to you. You can decide what you think is critical for your own business. If money gets really, really tight, you know, are there some things though you might be willing to get rid of or to lose in a short term in order to keep things afloat? So I always think about things like materials costs, shipping material costs, sorry, for e-commerce. You know, if you have to buy the boxes and those kinds of things, you can't ship without them. Therefore, you do have a materials cost. Payment processing, again, software. How about gas if you're delivering or you're going and meeting clients in the field? So this is really what you cannot do business without. And the way I explain it is if the sun exploded tomorrow, what would you have to have to continue to do business? And to ask yourself whether or not this is critical, here's a couple of questions, you know, that you can ask yourself. And can you do it manually? Were you doing it some other way before? And as you've gotten bigger, have you added on this service? You know, and basically you can decide which ones are maybe just an extra you're paying for. I always like to kind of have that analysis done and in my back pocket, not saying we would stop them today, but just saying, you know, look, if something happened, I would be able to get rid of these. All right, if you are in a business that sells or creates products, inventory or product right spend or the right spend of each month is a critically important concept. And this is because a lot of new entrepreneurs either over or underestimate things and what happens if you don't have the right amount on hand. If you underestimate, you're often spending a lot more money on last minute shipping or overnight express shipping and things like that so that you can meet your orders. If you are overestimating, then you have got product on the shelf that you're not moving and that's money tied up for you. So the thing is to know what right inventory spend looks like. In other words, what is the amount of inventory that I need to move each month to meet my other 3 walls, right? The way that we're going to look at this is we are going to want to look at, let me do this here, your greatest sales profit item, so the thing that returns the best money to you. Then the highest volume seller, the one that has the largest number that you sell every single month. And then I also want you to look at lead time. Some things take longer for you to get in stock than others, and it may be a good idea to keep some of those on hand. Now, right spend is something that you need to calculate, and you can take your time doing it, but I'm going to give you an example. I worked with someone who made custom t-shirts, and she had been spending an average of $1,500 a month in raw materials, and that included her vinyl, her sparkle vinyl, and all of her shirts, different colors and sizes and shapes. Well, that's because she had a lot of orders coming in. But when we broke away the orders that she had or didn't have and the amount of money that she actually needed to spend, as far as the ones that sold the most, the ones that sold for the most profit, maybe some of the higher end vinyl that she didn't necessarily always need to keep in stock, we realized that her right spend for raw material was closer to $650 a month. That's a huge difference. So she knows that in her quote unquote B number, she needs to consider $650 to be the baseline investment she needs to make every month into product and raw material so that she can continue to turn enough profit to pay her own paycheck and pay her utilities and pay her bills. That's what the right spend is for. Sometimes it takes a few times to calculate your inventory spend or your right spend to get it exactly right, and that's okay. But I do want you to be encouraged if you've over or underspent. Now is the time that you can do a little bit of analysis and see if we can find the right thing. Now, if you have overestimated, you have a lot of excess inventory on the shelves, Again, I want you to realize that that inventory is tying up your money, and that money is unavailable for any other thing. So what can we do? Well, we can move that excess inventory. And, I know I'm going to hear things like, well, I might have to take a loss on it or whatever. But if it's been sitting there for quite a while, really you're already taking a loss, because that's money that you no longer have for the utility of doing other things. So you can bundle your products and sell them at a discount. You can resell them to another wholesaler or retailer. You can offer a discount if it's bought with more than one item. You could do a buy one, get one free, or you could add on something. You can hold a flash sale. One of my customers who did have a boutique had some quote unquote limited items. In other words, they had onesie twosies left over from the previous season. And so she would hold a flash sale on just these limited numbers of items. And when they were gone, they were gone. Another one, again, with this discount, if she bought more than one item, is if they would buy 3, they would be able to pick from this stack of other things. And it just allowed her to move her inventory quickly. She may have taken a loss on some things, but it wasn't actually sitting in the store taking up usable space that she could be putting fresh inventory into. Plus, if you don't move your inventory consistently, it can start to look stale either on your website or in your store. So you want to make sure that you are taking steps to not let things linger, if you will. All right, wall 4, payroll and payroll expenses. This is my favorite wall. It's the 4th wall because the other things all have to be paid, in my opinion, first, because they secure your ability to transact business. But payroll and payroll expenses secure your ability to stay in business because you can show up. Now, I only have 2 rules. Number 1, you get paid before your debt. That's why payroll and payroll expenses are one of the walls and business debt is not. It's separate. The other one is that if you have employees, they have to get paid before you do. If you don't have employees right now, then it's just you we need to worry about. That's perfectly fine. We're going to go ahead and figure out what you would need so that you can write yourself a business check every other week and you don't spend from the till anymore. One of the biggest mistakes people make in the beginning is they start to pay personal bills out of those operating accounts. And we talked yesterday, or I'm sorry, not yesterday, but last module, about really having that bright line separation between your paycheck, personal expenses, and your business expenses. I want to make sure that we're doing this. And I want to really encourage you to make sure you pay your payroll expenses and taxes. Do not get behind on those. So what is a reasonable salary? So if I'm going to ask you to calculate a reasonable salary, there's 2 general ways that I like to tell people to start with. There's another way, there's 10 other ways, and that's perfectly fine. But these are the 2 that I generally tell people they can use to get an idea of a start. So the first one is to figure out what your desired monthly income is right now for where you are, and then take about 40% of that. So for example, if you want to make $4,000 a month, that's $1,000 a week. That's, basically $400 a week at 40%, $1,600 a month. So you would take home pay $800 every 2 weeks because we're paying every other week. And then we would figure your taxes on top of that. Now, to cover your 4 personal walls, we talked about the business bar walls. Your personal walls are your food, utilities, mortgage or rent, and transportation. If you have that number, if you sit down and figure out those numbers, then that might be the right, I guess, amount for your first paycheck would be to cover your personal 4 walls. Either one of those is fine. Again, there's 10 other ways to do it. There's no one right way. The thing I ask is when you figure out what that number is to stick to it and plug it into the B number until some financial change occurs. Either you're making more or less money. All right, withholding. You'll need to withhold 25 to 30% of your gross income in the United States for most of the time. Now, your self-employment taxes, actually this year, they're 15.3%, so I have to change this slide. So you are going to have to pay 100% of that as a self-employed person. When you're employed, your employer pays half and you pay the other half. That's why it may seem like it's a lot less going for withholding for your Medicare and your other self-employment taxes. And then, of course, withholding on your income tax if you have employees. That's another number. If you need help with payroll, get help. Please get help with payroll. Do not make mistakes here. All right. If you are going to withhold for yourself, I usually say you might want to withhold about 20% when you first get started, and within a year, 25 to 30% based on how much you're making. Now, once you do that, oh, let me make another point. When you're withholding this 25%, you're going to do this also from that account. So let me make sure I'm really clear. So here, if we want to make $4,000 a month, I know that 25% of that will be another $1,000. So that would be $250 a week. So instead of writing myself, $250 a week is $500 every 2 weeks. So instead of writing myself a check of $800, I would actually write myself a check of $1,300, and I would put 500 of that away into the account. So this way here, 25%, I'm sorry, I did that wrong. No, I didn't. 25% of $1,000 would be $250 a week. So you would want to take and put $500 away, so that you, hang on, I did it on $1,000. I'm so sorry. If you have $1,600, yeah, I completely messed that all up. Forget what I just said. If you're making $4,000 a month, then yes, every 2 weeks withhold $500. But if you're making $400 a week, every 2 weeks, you're going to want to withhold $200. So if you pay yourself $800 every 2 weeks, you would add $200 to that to pay your taxes with, and you would actually write yourself for $1,000 every other week. So I'm very sorry about that. If I confuse anyone, email me and I can straighten that out. But yes, you want to withhold that on top of your 40% that you're paying yourself. So it's actually your business is paying your taxes. All right. Sorry about that. Well, now we get to add all the walls together, and you can have your B number. So add wall 1, 2, 3, 4. Why then do we do each wall separately? Well, because you can see there's analysis that's needed on each of those different walls and lots of parts and pieces. So you can make a change to wall 2 by removing something. You'll change the entirety of the B number, but you're actually in control of the critical operating expenses at a very granular level. So when you add all 4 of those numbers together, you get your B number, your breakthrough number. And this is the number that you're going to base your monthly spending plan on when we get to your emergency fund, your C fund, other metrics. And as you change your expenses and your paychecks go up, you recalculate this number typically once a quarter. And then this way here, you have this number. This is your base number. You know, no matter what happens anywhere else in the world, I need to make X amount a month. This is going to cover all of my expenses. This is going to cover my paycheck, so I get paid every other week. And this is going to be the base number that I know. Everything above this is profit. This B number, this base number here, is going to be the number that shows my business is self-supporting 100%. So that's your breakthrough number. That's the number we're going to base everything on. Okay. Now we still have to identify the rest of your other expenses and also your financial goals. This isn't just stuff that comes out of your check. This is also stuff that you're aiming for. So your business debt, if you remember, I told you, you get paid before your debt does. And the reason is, again, to make sure that you're receiving tangible reward. This can seem a little difficult in the beginning. We'll talk a little bit about that when we get to the planning. But right now, just know that you get paid before your debt. Debt, though, is very important, and we're going to identify your business debt. We also want to identify categories of monthly business spend. So do you have marketing spend? Do you have projects that are in the works? Do you have launches you're getting ready to do? Do you have time frames on some of these things? We need to identify all that stuff because it does affect our money. It affects when our money comes in and what we need to do with it. And then also, I want you to have some future goals for your business. I want you to have goals for adding on, new services and products. I want you to have goals for growth, some benefits that you're going to receive, maybe adding on a new VA, that kind of thing, and a rough time frame when you want to do these. These are important, again, because they're going to affect what happens to the money when it comes in the door. So business debt. We will be making a plan to deal with your debt in the planning module, I promise you. But for now, lay it all out. What do you owe? I want you to include your loans, your credit cards, your lines of credit, your equipment leases, and I want you to keep emotion out of the exercise. I don't want you to feel bad about your debt. I don't want you to be worried about it. I don't want you losing sleep over it. Just get it down on the paper so we know exactly what we need to include and put a plan to deal with it. Also, there's no judgment here. So if you email me and you tell me that you don't know how to do this one debt thing and you're not sure if you should include it, whatever it is, I want you to know I've seen it and I've done it all. As a personal financial coach, I worked with a family that had over $750,000 in student loan debt alone. Okay. It was a lawyer who went to a private school and somebody with an MBA who went to private schools for both undergrad and um, graduate school. And then they had put their loans in deferment for a few years. So I have seen and heard it all. There's no judgment here. Again, you heard my story in the last module. I mean, we have made all of the mistakes. If you are in business set up to your eyeballs and you're losing sleep at night, email me. Let's get some strategies together. But I don't want you to feel bad during this exercise. I want you to just be honest and get it all on the paper. Okay, more fun. So what do you spend on marketing, or what would you like to spend on marketing? What are your projects right now? Do you have budgets in your projects, or do you just list projects? I want you to put money towards those. And then do you have any launches that are coming up? Maybe you're launching a new course. Maybe you're launching a new line of business. Maybe you're putting a new product out in the world. These things, marketing projects, launches, those kinds of things are actually all calculated once again after the B number, because your B number again protects your ability to get in every day and continue to generate money. Marketing is part of generating money, but in a pinch, you could do things organically. What I don't want is you to skip paying your internet bill because you're paying Facebook ads, okay? Again, this is all about your prioritizing. So I want you to be very specific, but I want you to identify your other business spend, your marketing spend, any projects that you have going on. You know, maybe you're going to hire a VA in 2 months. Maybe, you know, you want to add some new service that you can give to your clients, but you have to order something. For example, I had somebody I helped who had a lash business where she had a lash salon, and then she added on eyebrow tinting. So in the future, she had to have that product on hand to be able to do that tinting. So that's something that she had, you know, put down as a future launch to her business. I want you to estimate again your project spend, even if you're a month or two out. I want to know what you're spending or what you expect to spend, because that will affect our plans. And then finally, your business goals. So what is next? What do you want for your business? If you want to put something on a new platform, do you need a website upgrade? Do you want to buy a funnel so that you can do online advertising? Do you have some new process that you're going to need to buy something for? You need resources to put against? Or do you want a new employee? I want you to estimate these changes for your future business goals and put a timeline next to them. And in the book here, you know, you can put asterisks or numbers or whatever, and just kind of, I want you to take a few minutes and kind of dream about, what does the next 6 months in my business look like? Give yourself a time frame for that. And just as an aside, if you are going to add an employee, because employees do have some other core costs involved, like paying half of their Social Security and Medicare here in the United States, basically what you're going to want to do is you can use the B number calculation we just went through and change up the variables like adding an employee and get an idea of what your new cost could look like. So you don't just have to put it down as a future business goal. If you don't have a cost next to that, go right back into the B number, do those couple of spreadsheets really quick, add that in and see what that's really going to cost you. So you can use that analysis actually quite a bit to help you make some decisions. All right, your cost benefit analysis list. So we will talk in depth about the cost benefit analysis and making good business decisions in one of the bonus modules. But for now, if you have something in mind, oh, I wonder if I'd like to do that, go ahead and write it down. What is a goal for your business that you don't maybe know how you're going to get there, but it's something you'd like to see? We can always do a cost benefit analysis in the future to see whether or not the timing is right, okay? All right, so here's the thing. Now that you have your B number, I'm going to give you a couple of other steps to keep your money stuff stress-free. Because I'm sure for some people, they sat down and did this exercise and they wrote down all their debt, maybe for the first time. They wrote down all their goals. It seems so far away. And maybe we had some anxiety come up. And I know that happens because I've worked with people and it's happened in front of me. And in fact, in the beginning, it happened for me. But I want to tell you that now you know your B number, so you know when you have made enough money, no question. Now we're going to do some fun stuff. We're going to have some visual reminders that your spending plan is working. and we'll do some of that in planning. But you're going to have things in front of you that you're going to be able to take care of and mark off and see and play with, so that you know that you're in control and everything is going the way it's supposed to. Then you're going to celebrate your successes when you hit your goals. And in fact, tonight or today, whenever you're taking this, I want you to celebrate your B number. I want you to celebrate that. I want you to, I don't know, go get a glass of wine or take a walk around the block with your dog. Whatever it is that you do when you celebrate your little wins, that's a win. That's a huge win. You now have that number. Then I want you to know that we're going to be working on some backup stuff. If you have a wonky sales month, you're going to have a backup plan to make extra cash. We're going to have these additional plans in place to allow you not to stress, again, over your money, because nothing is going to surprise you. You're going to be in such a great space. And then finally, I want you to embrace your vision. Keep it right out in front of you. We just did this great exercise. And again, you could pause me. I probably should have told you this sooner. Pause me if you need to, so you can fill out these things. Or again, listen to this again and go back and fill it out. But you know what? You just wrote down your goals. You just wrote down what you want to put into your business next. And I want you to keep that in front of you, because you do have a real goal, you have a dream, you have a vision, and keeping that in front of you will just make you run for it harder. So that's it for module 2. We got some action items. If you haven't finished it, go ahead and calculate your B number. Determine your other categories in business spend. Make sure you write those out. Take a little time and think about it. Identify your goals, write those down, and celebrate having your goals written down. Gonna be honest, I've worked with enough entrepreneurs to know that not everybody writes down their goals. They just keep them in their mind because they're afraid to share it, or they don't know that they're really ever going to make it. So putting it on paper is scary to them. I don't want that for you. Identify your goal. This is amazing. And then again, give names to your profit parking lots. Basically what that is that's where you have listed out where your profit's going to go. After everything else, where am I going to put my money? And we'll talk more about that in the planning module, which is the next module, module 3. So great job. Really excited you've made it this far. If you want to drop me an email, assist@entremoneycoach.com, and tell me your B number, or go right into social media there and, go ahead and let me know. I got my B number. I'm good to go. Everything's fine. That would be great. So until I see you next time in module 3, congratulations on finishing the first third of the course. Modules 1 and 2 are done. And congratulations on taking this step to keep your financial shit together. Take care. Have a wonderful week.